People are making millions with Shiba Inu just now. Is it a bull run? At first sight, it might seem that going all in Shiba Inu might be a good idea, but it's not that simple. Let me explain. Disclaimer. Investors in Shiba Inu are currently rejoicing as SHIB undergoes a notable upswing, breaking free from its previous stagnant phase. Indications of a rally are emerging, aligning with broader market trends. Notably reflecting on the historical lows of this cryptocurrency reveals that investors could have amassed $18 million with a modest investment of just $50. This remarkable achievement is attributed to the practice of dollar cost averaging. DCA involves consistently investing a fixed amount irrespective of the current asset price, with the aim of mitigating the impact of market volatility. This method is particularly favored by long-term investors seeking to steadily accumulate wealth over an extended period. The strength of DCA lies in its ability to smooth out the effects of market fluctuations, allowing investors to benefit from both highs and lows. Analyzing data from Crypto DCA underscores the considerable potential of a modest monthly investment in Shiba Inu. Imagine an investor allocating $50 monthly to SHIB from August of 2020 to November of 2023. Over this period, a total of $1,950 would have been invested in SHIB. Astonishingly, the portfolio's valuation at the time of this analysis had surged to nearly $18.3 million, representing an astronomical increase of 1,125,000%. This showcases the incredible wealth-building potential of Shiba Inu through the disciplined application of DCA. Shiba Inu has sustained an overall upward trajectory, aligning with broader market trends. SHIB, known for its vibrant community and unique appeal, consistently undergoes a sustained surge in price, enhancing its attractiveness to investors. The narrative of turning a $50 monthly investment into $18 million through dollar cost averaging in SHIB serves as a powerful illustration of potential rewards for investors adopting a disciplined and patient approach. While Shiba Inu's daily prices may experience fluctuations, the demonstrated long-term growth underscores the effectiveness of DCA as an investment strategy. As the cryptocurrency market evolves, the success story of Shiba Inu inspires its community and other investors, emphasizing the transformative power of consistent and strategic investment practices. However, we can't be that euphoric. If we take a broader look at the cryptocurrency market, we clearly can see that almost every crypto coin is pumping now. For example, Bitcoin made a splash by reaching a new high for the past 6 months, peaking at $38,000 on the Coinbase crypto exchange. This surge, the strongest since May of 2022, is fueled by growing speculation that US regulators might greenlight Bitcoin spot exchange traded funds or ETFs, potentially paving the way for a significant influx of investment into the cryptocurrency market. Recently, some analysts pointed out several chart patterns hinting at possible Bitcoin price targets. According to their analysis, if a flag or pennant formation is confirmed, Bitcoin could surge to an all-time high of $43,289. But how is this related to Shiba Inu? Well, keep watching. I will tell you very soon. Adding to the positive vibes in the crypto realm is the news of an iShares Ethereum trust getting registered in Delaware. This move follows a similar step taken by the iShares Bitcoin Trust, indicating a growing interest from traditional financial institutions in cryptocurrency-based investment products. Investors are keeping a close eye on these developments as they could mark a significant change in how accessible and legitimate cryptocurrency investments are perceived. The long-anticipated approval of a Bitcoin spot ETF could enable direct investment in Bitcoin through traditional accounts, bypassing the need for dealing with digital wallets and exchanges. But why does it matter to us, SHIB Army? Shiba Inu made some huge gains during the last 24 hours, and at first sight it might look that it is the best time to buy. But don't let FOMO take over you. FOMO is short for fear of missing out, and in the world of cryptocurrency, it describes the anxiety people feel when they see a cryptocurrency's price rapidly rising. This fear of missing out on potential profits can lead individuals to make hurried investment decisions without thoroughly thinking them through. For instance, someone experiencing FOMO might impulsively buy a cryptocurrency because they're worried about missing out on potential gains. This impulsive behavior can result in buying the cryptocurrency at a high price, especially if the market is already on an upward trend. If the price subsequently drops, these investors may end up facing losses. The emotional response associated with FOMO can lead to a lack of proper research and risk management. Investors might put more money into the investment than they can afford to lose, neglecting to consider potential risks. Cryptocurrency markets are known for their volatility, and FOMO-driven decisions can contribute to exaggerated price movements. When the market corrects, those who bought during the FOMO phase may experience significant losses. To avoid losses caused by FOMO, it's essential for investors to conduct thorough research before making investment decisions, establish clear goals and entry and exit points, diversify their portfolios to spread risks, and stay informed about market developments. By being mindful of FOMO and making rational decisions based on careful analysis, investors can reduce the likelihood of significant losses in the cryptocurrency market. So please be careful with your Shiba Inu tokens if you hold some. Next thing you need to know is there's no light without dark. The party won't last forever. The crypto market showed rapid growth during the last month, and it cannot be passed without consequences. There's always a place for a price correction. A market correction takes place when there is a brief decline in prices following a rapid rise. When a market becomes overbought or overvalued, it experiences a correction, marked by a sudden but temporary decrease in price. In simpler terms, it's like a pullback from recent highs that allows the market to absorb gains and reset for a subsequent upward movement. Typically, a market correction is considered a fall of 10% or more after a recent peak, although some corrections may result in a 3% decrease, while others can lead to a 20% decrease. In the cryptocurrency market, 5 to 10% corrections are more common. The 10% threshold is not a rigid rule and can be surpassed. Market corrections usually occur when investors become overly confident, driving asset values excessively high during economic expansions. This sets the stage for a reversion to the mean, as corrections bring prices back to more reasonable levels. How often do market corrections occur? The frequency of market corrections varies between the stock market and the more volatile cryptocurrency market. Stock market corrections typically happen every 2 years. Cryptocurrency market corrections, on the other hand, lack a set schedule and can occur within days, weeks, or even hours due to the market's heightened volatility. What triggers market corrections in cryptocurrencies? Market corrections in cryptocurrencies can be triggered by factors such as overly optimistic investors, unclear regulatory conditions, or widespread sell-offs. Common triggers include 1. Excessive speculating and investing euphoria. 2. Fear of missing out or FOMO leading to impulsive buying. 3. Hacking of exchanges resulting in significant losses. 4. Uncertainty over regulations causing sell-offs. A crypto pullback refers to a brief pause or reversal in the overall trend of an asset's value, which differs slightly from corrections. Pullbacks are considered positive in the market cycle as they provide an opportunity for the market to reset and digest gains or losses before resuming the previous trend. In the cryptocurrency market, pullbacks can occur multiple times during both upward and downward trends, representing a temporary interruption before the asset returns to its previous behavior. And with that, we come to the end of this video. Thank you for watching. If you enjoyed the content and found it valuable, make sure to hit that like button, leave a comment with your thoughts or questions, and most importantly, don't forget to subscribe.